What's up, DR fam? Hope everybody's doing well, having a good day. Let's talk about DR today. See where we're at. Um, now let's see. Let's go. We're looking at ES right now. I'm going to do a little high time frame analysis. We didn't do this yesterday, but just really quick because we did take out a couple of liquidity lines today, especially the dailies. So this is looking at a weekly chart. So this one is this week. This is last week. And so what you can see already this week, we've taken out a daily buy side here. And we took this one out first, and we took out the second one. And we've also taken out a sell side, daily sell side. So a lot of movement this week, except for something. If you would notice, we are basically in the same spot we were a little while ago. We probably had about 4 points of true movement in the last 2 days. So let's get in. Let's go down. We can look at the daily real quick. And so here you can really see where we've taken out the different liquidity loans. So again, we had this candle here today that basically, if we want to look at it, let's get rid of them while we're here. We took out that one. We also took out that one. Now, remember what happens when we get to these zones, right? And maybe I should have done that before I got rid of it, but I want you to remember something. When we do that, let's put it back for a second. Remember we talk about these liquidity zones, the buy side and sell side, and the higher the time frame, the more powerful they are. And what normally happens when you get to a liquidity zone is price may reverse because they're basically orders sitting down. In this case, let's go. Let me get rid of that thing. All right. So in this case, let's say we're using this liquidity zone down here, that sell side. And once we come down here, there are orders sitting down here waiting to get picked up for price to go back up. Okay, and these are the big boy orders, right? So hedge funds and the big banks and those kind of things. So that's why I do mark out my liquidity lines. I go weekly, I go monthly, daily, and then weekly. And again, the higher the time frame, so the weekly is more powerful than the daily, and the monthly, of course, is more powerful than the weekly and the daily. So if you notice what happens, like I said, for this week, we came this day to yesterday, we went down. Or today, I'm sorry, we went down, and then so we went down. Did I get that right? All right, we bypassed that liquidity, and then we turned back around and went back up. Went up, took out both of these liquidities, and then came back down, ended up right back in the middle. Okay, and so that's what we're saying. We use that as kind of like not support and resistance, but really an indicator of where price may decide to retrace the other side. Okay, so now we can actually get rid of these because now they've been used, so they're no good anymore. All right. And so if I want to mark this out on the daily, right now, what I'm saying is, okay, so the next thing I'm looking at is we'll look at, we'll put one here, and that's going to be a daily buy side. Okay. Set that up. And then we have one more, which will be here. So, what I do is, it'll be here. Oh, where'd it go? Hold on a second. It's not supposed to take this long. All right, there we go. So now we have a daily sell side. Okay. All right. So that's what we're looking at next, right? So those are my next two targets because there's nothing else until we get above those or below those. We have a weekly buy side above that one. All right, we have this weekly buy side up here, right, that line above. And then we have, some daily buy sides below. So we'll be looking to see where price goes. And, again, once price goes up one direction, gets to a liquidity, it'll actually, a lot of times it'll turn around and go the other way. All right, especially on the higher time frames. All right, so that's where we are. Now here's the interesting part, and you guys know I love the ES. I'll take that down to the 5 minute. I love the ES. That's my favorite. And this is, S&P 500. And you can kind of see how it's set up today. Now, interestingly, I did not trade the ES today. I actually traded an NQ. Blame one of my friends in one of my groups. She's always trading NQ and singing the praises. And NQ does move differently than the ES, right? So ES, you think about it from a mini standpoint, that is each point is $50, right? So each tick, each quarter point movement, what we call a tick, is a $12.50, right? If you're on the mini, if you're on the micro, it's 1/10 of that. But each point is $50, whereas on the NQ, which is the Nasdaq, that one is $20, right? So yeah, each tick is $5, and then each point is $20. But for some reason, it moves a lot faster. Right? And again, I think you're talking about Nasdaq futures versus S&P futures. All right. So what happened today, even before, and what got me was before we even set up for the New York session. All right, now looking at Nasdaq now, right? So we're on the Nasdaq. So again, our pricing, of course, is different. Where ES is in the 4,000 plus range. This is in the 15, 16,000 range as far as numbers go. But what got me started on this morning was right around 8 o'clock. I had two things that happened. One, I was up here and I was looking at. Let me move this back a little bit because it's based off London. And so London had come up, and you could do the same thing on ES, right? It's just which one, kind of hits your fancy because they're kind of moving in the same today. But for some reason, I was on ES. So the first trade I took was just a gut trade. So I had this movement coming down, and it came down below the DR. So it confirmed DR high on London. Came down below that. Came down below IDR high. And then, so I actually just jumped on a trade in here and let it ride down. And then I said, okay, right. So that was kind of a gut trade. It wasn't based on DR or any science. But then when it got down to it got down here, I said, that's interesting because now if you look at what's happening, we are in line for a pretty good retirement setup, right? So once price comes down here, the wick's down, it doesn't close down there. So I put my order on DR low, okay, before it priced to go back up. And so I had a really nice move back up right before I left to go to work. So was kind of enthralled with NQ. If I switch over to ES, if I switch over to ES, I just want to see if it looks the same. If I can get rid of this thing, well, don't let me. All right, so if I look at ES real quick, and I look at London, okay, I want you to notice something, right? And this is again where it gets a little different. So we're still using DR. If you notice on this one, we actually closed below. So we had a false day for London, okay, on the ES, all right? So that wouldn't have been a trade I was able to take because that just didn't fit my profile. And I actually couldn't even have taken this one because, I could have, but it didn't retrace until over here, and it wasn't a really strong movement after retrace. It actually ended up coming back down this way, okay? So you can kind of see the difference. And so today, like I said, NQ just kind of worked better for what I was trying to do, right? So let's switch back over to NQ. And like I said, you can see the difference here, that we wicked down, didn't close below it, then moved back up, okay? So that's a legitimate, solid, easy trade to take. Same thing over here. Remember on ES closed above and just kept going, right? Here NQ actually had a retrace, okay? Actually had a retrace after it closed above, and then it moved up, okay? So you could have taken that trade there if you're up at 4:30 in the morning on the East Coast. So what I'm saying is you can look at both. Like I haven't traded NQ heavily just because I just was an ES fan. But actually I will because a lot of times you're waiting for ES to set up. NQ is moving faster and then it doesn't set up much faster. All right. So, okay. So that was the start of the day. And then throughout the rest of the day, I just started playing. I said, let me see what NQ does today. Right. So again, kind of got enamored with it and had some pretty good trades here. All right, so we closed high here, confirmed high here, went back up, took off like a rocket, and then we came right back down. Great trade here. Just jumped in on the IDR low, and then took that ride up. Okay. Now, I will tell you, I was up, a certain amount, so it was actually a pretty good day, and then price came back down again. Now, I'm gonna tell you where I got a little greedy up in here. Okay, I don't trade the price coming down, but what happened was there was a fair value gap sitting here, and then price started coming down into it, and so I grabbed the order for it price to go up. Notice how far away I was from my DR lines. Okay, so this was not a DR trade. This was a, just me being trying to be greedy trade. And one reason why I traded just on paper trading yesterday was to kind of get it out of my system. But obviously it didn't. And so I gave almost half of my gains back here, which I was, it is what it is. I mean, I was way above my daily, kind of target, so I was still okay. But I was a little salty. But then price came down here. Look where it came down to. Came down to that point 0.5 fib. All right. You know what we're going to do here? Order on 0.5 fib. And boom, there we go. Okay. Nice and easy. And then the last one I took. Now, well, I told you what I did. I didn't take this one, which was another one you could have taken, which is very easy here, right? So price comes back down. It gets down below IDR, orders on IDR, and boom, there you go. All right. So, I mean, this was a really, just really clean trading day if you, again, just follow the rules, right? All right, and so the last one I took, which was really late, this one was basically a 331. So price had come back down one more time, had a nice solid move down. And then what I saw was this move. I saw this fair value gap here, right? Bullish. Price wants to go back up. Came down into it, went through it. And I said, okay, well, if it's going down, I'm good because I won't lose anything. Put my order right here on IDR and boom. Nice way to end the day. Got out with a nice trade there. So, all in all, just a really, really, really nice day on the NQ. I really haven't gone back and see. Now you guys gonna make me do this, right? Sorry, I know this is getting long, but I just want to see like where I would have been on ES, just to see the difference. It might help you guys out as well. All right, so let's just do it real quick, right? So we confirmed high here, went all the way up, did not come back down to my DR zone. Okay, so I don't have a retrace here that I can use. Then price takes off again up here. Now I will tell you, just looking at this, I don't want to confuse you guys, but here's a really nice fair value gap. Okay, so if you're really brave and you were doing ES, you could have taken that fair value gap because there's a, price comes down into the fair value gap and then takes off. But again, that's not a true DR trade, but again, it would, it would have worked from a ICT standpoint. Okay, so but again, we're trying to see where DR would have taken us. So no trade here, no retrace. It goes all the way up. Literally, up goes up and almost takes out. It looks like a daily. Yes, there's that daily buy side up here. Didn't take it out though. Kind of touched it and rejected off of it. Comes all the way back down. So honestly, your first pure DR trade, this would have been a tough one because price comes down here. You could have put an order on here for price to go back up. So you'd have been good there. You'd have been good for this move here. Okay, and then this one you would have been good. Well, it depends on what you're, let's see, 45, 55, 40. Yeah, you could have been good here, even though you had this wick down. You would have been well within your, stop loss parameters. Oh, and the other thing, you gotta remember, we only had like a 9-point range today on ES, so it wasn't big at all. So was expecting some shenanigans, so to speak, right? But anyway, so here's again, so we had this move here. You could have taken that trade, and then here's another one that you could have taken at the end of the day if you were brave enough, right? So there were opportunities there, but the big move you would have been kind of locked out of, quote unquote, because again, you wouldn't have had a pure DR setup there, right? So anyway, I rambled long enough. Hopefully this was helpful. So I'm going to do now is I will actually, I did upgrade my trading view to the premium one, so I get like 15-minute charts and stuff. So I will be running, I do have it set up where I can see multiple charts at the same time. And so, at least on my tablet. So I will actually be looking at NQ and ES at the same time to see which one is actually working better in the moment, right? And so that'll help me to determine which I want to trade. And then I just got to remember which one, okay, NQ is 20 points, $20 a point. ES is $50 a point. So I don't mess up my risk management too much, because actually NQ, I can be a little more aggressive on some of the trades because, again, it's only $20 a point versus, $50 a point on the ES. And like ES, I had started doing, 2 and 3 contracts every once in a while. So I can do that on NQ and not be as worried about, the stop losses and those kind of things. So I hope this was helpful as always, guys. Leave your comments in the comment section and we can go through things. But yeah, again, we're ES family, but I told somebody, I say, like, I'm cheating on ES today, but but NQ was doing this thing today. So we'll be start looking at both of those now to see which one makes the most sense. So anyway, hey guys, love on your loved ones. You never know when you won't be able to do it again. So take advantage of each and every opportunity. I appreciate you guys, and we will talk to you later. Be good.